And we're live and back with a great group of panelists here. We have Vinny Lingham, who's the Oracle of Bitcoin. He's been on a South African Shark Tank show and is a founder of and CEO of Civic and Waitroom. You can tell us a little bit more about that. We also have Katie Talati. And she is the director of research at Arca and leads the investment research team. So glad to have her. And also David Gann is the founder and general partner of OP Crypto. So we have venture capitalists here and this institutional investment kind of representation. So I'm glad to have all of you here. So it's been a crazy crypto market in the last month and a half. So it's I want to kind of discuss that as well as just long-term strategies, regardless of short-term bear markets or maybe even a longer-term bear market, what your thoughts are. So maybe just let's just start off more on a positive note first. So what are the biggest trends we should just keep track of in crypto in general? What are you guys seeing? What is the must kind of must invest in or must pay attention to trend that you're seeing in crypto? Anyone can chime in first.
Ladies first. Katie, go ahead.
Okay, I was going to say I can start off. I mean, I think even after we've saw the downfall of Luna and UST, but I do think stablecoins are still one of the bigger trends to watch in terms of just like immediate use case adoption. They're one of the things that have definitely kind of stuck immediately, and payments is really still like the biggest use case for digital asset technology. And I think that's like one of the areas that will just continue to grow and actually get mainstream adoption versus some of the other trends that I'm also excited about are still kind of nascent and still in the early stages.
All right, great. Vinny or David, you want to follow along, or if you have kind of a question to Katie, feel free as well. But what are the biggest trends? So she says stable coins and
well, I mean,
payments and DeFi.
I'll jump in a little bit. When I got into Bitcoin, this is back in 2012-13 era. The whole point of Bitcoin was to remove the need for Visa, MasterCards, banking. If you look at the stack that is involved in payments, it's pretty complicated and kind of stupid, actually. But it was one of those old school ways of thinking about things, just lay it on, it's just layers. It came from 1950s onwards. If you go back to the origins of credit cards with American Express and, I think it was Diners Club actually originally. The idea was that there's an account that you bill and they'll pay you later on as a merchant, and you can trust the person's card that they're a member of this billing service. I don't know whether you guys remember the old days of credit cards. Like, people don't remember credit cards. Like, a lot of people only remember like the past 20 years of electronic credit cards. Back in the 80s, you stick the plastic card, put it into this like plasticky device, and then roll like an imprint of the card. The reason like the card numbers are sort of raised on most credit cards, where it was these like machines that you'd run this double-sided carbon copy paper on back and forth and get an imprint of the card, and that would work like a check, where you as a merchant take it to the bank and it proves that holder was there, and that's their signature, and they effectively signed a debit on their account. And that's the amount of legacy in the payment stack goes back 70 years. And people don't appreciate how convoluted the stack has become. And even though we've gone electronic now, you don't really have these like card roller machines. It's still convoluted. And the only reason credit cards really work today is because, and the credit card industry exists today, in my opinion, is because obviously entrenchment is one. But the second reason is consumer protections, because you want repudiation on a card. So if you think about the way credit cards were stolen back in the old days, like if you stole a credit card, you could go to a merchant. There was no electronic verification. They'd give you a hot list of cards you could check for stolen numbers against, but you literally had to, like, I used to work in my dad's shop as a kid. That's why I know this. And you used to like swipe the credit card across on this physical machine. And credit cards used to get stolen, and people would go around town, and you'd need the consumer protection in place on that card, because if my card was stolen, how do I? People would really get panicked because they'd obviously get billed and lose money on it. And so credit card companies evolved to basically put the merchant at risk, and the merchants had to check there's ID or signatures to make sure it was valid. And so we're at this point in time where we've built an entire system on merchants being at risk for credit card fraud, because they're not certain who the end user of a card is. But with crypto, you've got private keys. So if a user has the private keys and can sign a transaction, they can prove that they own those keys, and therefore the funds should be transferred immediately and settled immediately. And you don't need to have the current credit card system. So I think payments and the disruption of payments is probably the most important thing that crypto can do right now, because I think the payment stack is broken and it's expensive for consumers and merchants, and they're taking 2 or 3% out of the system on every transaction. And I can go into a whole soliloquy, or even more so now, about how a 3% tax on every transaction is horrible for any economy. It really slows down the velocity of money, and if myself and Katie did a transaction right now with credit cards back and forth, after about 10 or 15 transactions, $100 would be whittled down to zero. Okay, it's kind of crazy, right? In crypto, you could use Solana back and forth, 1,000 times, and $100 would still mostly be there. And that's the difference right now. If we can get rid of the tax on payments, I think the world economy will be in a better shape. But you have to solve the consumer pain points as part of that.
Okay, that's great. So let's keep it just real quick, a follow-up here. Then who are the winners in payments? I know Katie mentioned stablecoins and you mentioned Solana, but so who are the winners that you guys are betting on in this payment space?
No specific names yet. I mean, we've seen obviously a lot of uptick from USDC and Tether, but there's also the on and off ramp type providers in the space that are also pretty instrumental, I guess, from an infrastructure layer. So MoonPay, Ramp, any of those that are facilitating the transfer of dollars into crypto is a really good starting point.
Okay, great. And Vinny, any specifics? Specific bets on payments?
I mean, I think Solana Pay is really interesting, and there's a lot of progress that's being made on that right now. It's more about, can you get to the point where so Ethereum and payments on Ethereum and Bitcoin is just too expensive. You still have the 2-3% cost problem. So it's not better than Visa, MasterCard, right? But the moment you go to something where you can get the transaction cost below or around about a penny, all of a sudden it makes a lot more sense to use a crypto network than not. And so I think the original vision for Bitcoin, as per the white paper, was really around payments, and we've evolved it into being a store of value, but we've never really gone back and solved the payments problem that the original white paper intended to do.
Okay, great. And David, if you want to follow on, if you want to add to that, or maybe give your long-term biggest trend to follow in crypto.
Yeah, happy to answer both. So I kind of take a more contrarian view in how the world will be. I guess to answer your first question, I'm getting myself ready for a full-on advent of the digital economy, right? Where I essentially hold almost 100% crypto. I don't hold any real-world assets. I hold no cash. I can do pretty much everything just within crypto. So I actually think the biggest payment facilitator is just cryptocurrency itself, right? It doesn't necessarily have to be USDC, Tether, or whatnot, but you're able to do pretty much everything if you have the right service providers. I ask a person to book hotels for me, to book flights for me, can send my assistant some USDC and they'll get coffee for me. They're just because now I think crypto is getting more and more widely accepted globally. You don't necessarily always have to think about how do I cash back into fiat and how do I cash back into crypto. I think just staying full in crypto is the way forward, especially when we think about how eventually everything will be done in the digital economy and in the virtual world, in the metaverse. There's not going to be dollars, Singapore, or Singapore dollar or yuan or all these different monetary currencies in the world. There's just going to be crypto or some version of crypto that we use as a payment facilitator that is very interoperable, and there's no monetary control policy like there's in China, or there's not a very sort of rigid way to move one asset to another. Like, how do I physically give Vinny or Katie any physical possession that I own right now? It's just it's almost impossible, right? Like, I have to know their bank account, I have to know their all different sort of payment identifier before I can even give anything to them. But I think in the virtual world, it's like everything is super portable, super interoperable, and I can very easily transfer my digital assets, whatever that may be. And maybe like that's some version of land, some sort of clothing, like all those things that you see in the physical world will have some digitized format of it. And like when we live in sort of the more online metaverse world, like all of that will be much more important to us than anything that we own physically in the real world.
Okay, that's a great. You know, David's a little younger than all three of us, I think. But are we gonna live?
I just I'm Asian, so
no, but you're probably like, yeah, the metaverse, the metaverse economy. Are we going to be living in this metaverse economy, or you know, is the old school? Hey, we're go outside and see nature. Is that going to still be relevant? Because I mean, it does seem to be that the trend is going to be. It seems purely digital. So maybe to follow on David, Vinny or Katie, what is this it then? Is it like a purely digital? Forget. I mean, this is the carbon copy. Credit card system is just way too far back.
I don't see us only living in the digital world and just being like Ready Player One, like we're in the Matrix where we're just like plugged into the computer and like living this virtual world. But definitely more and more. I mean, I think like you're going to see a lot more like live entertainment events have like dual venues. You're going to have like a real life venue, and you're going to have like the metaverse venue where a certain artist plays a show. I think that more and more online interactions are going to be in like the metaverse. I think during when the pandemic started and a lot of us were at home, like I think we've gotten to be way more comfortable, for example, with stuff like this, virtual conferences, virtual social networking events and stuff like that. And I think more and more we're just going to be kind of like seeping into that kind of crossover between the way we live in the digital world, but still having in real life events. I don't think that's ever going away.
Okay. Vinny, metaverse or real?
I don't know how food tastes in the metaverse, but I'm sure it's not as good.
Yeah, I don't know. IVs, I guess, will be like
digital IVs. No, I mean, look, I think there'll be a lot of commerce in the metaverse. I think people like having, being a little older and grayer. I think the perspective I've got is that things just take time to change. And I grew up as a kid, playing with VR tech back in the 90s, and it's come a long way. And I think Oculus has done a good job, but it's still not, it's not what we envisioned when I watched The Lawnmower Man, right? And that was, 20, 30-year-old movie. And I think we're still maybe 10 years off from that. And, and maybe we get like all matrixy and everyone gets plugged into VR headsets with their side. I don't know. It's not going to happen to me, and it's probably not going to happen to, the current generation of kids because, but maybe the next generation, maybe like 10, 15 years from now, that's all they want to do. But I kind of get the idea that there's this virtual, and I'm a big metaverse investor, and I think it's all interesting, but I look at metaverse stuff as gaming. It's all gaming, and there's a bunch of people who want to play games all day, and that's fine, but there are people who want to go out and do sports and everything else. And when you pay for a Coke at the the vendor on the side there who's selling you a Coke after a volleyball game, he's not in the metaverse, he's in the real world, and he needs to get payments, so you got to figure out how to make a payment happen.
Yeah. Okay. No, that's great. And so it's fascinating. And there was one earlier data point, Natalia from Proppy mentioned that, she has a blockchain real estate business, physical real estate, but she said, hey, the volume in land sales, there's like a couple billion in the metaverses. So it's mind boggling to just think about it.
I have a lot of metaverse land. I'm like, I get it. It's, I own this land on the basis that I'm speculating that it's going to go up in value over time. And, it's interesting, but I'm not expecting it to happen this year, next year, or in the next 5 years. I think it's just definitely a long-term buy and hold. It's like, you always come across these people who bought like hundreds of acres of lands for like $50,000 like 30 years ago. Like I want to be one of those guys digitally.
Yeah. All right, great. So let's go to a more kind of not depressing topic, but what's more relevant in the recent times, and this kind of going back to reality is that crypto markets have been kind of it's been it seems like a bear market. The altcoins have gone down from peak to trough around some 80%. So what is this? Is this a short-term regular crypto cycle? Are we in a bear market cycle? Also, this time around, we have what looks like a possible global recession, which we've never had in the history of Bitcoin. So maybe anyone wants to start share their thoughts on that.
Sure. I think it depends on just who you ask and where you are. I think biggest proponent of it is depending on sort of where you're living right now. So I guess for all of us in the US, we're definitely very much in the bear market, and it's not gonna look any prettier going forward. But I think when I spent time in Africa just last month, and I was in LATAM a couple of months ago. Prior to that, it's very much of a still vibrant, new fintech, new crypto native economy there, and they're not really feeling the effects of the bear market because they haven't very heavily invested in crypto nor the equities market, right? So for them, everything is still very new. It's almost refreshing to see anything out of just agriculture or manufacturing in these new economies. And I think getting back to what I was saying earlier, I think not necessarily everyone will live in the metaverse per se, but I think eventually all sort of payment processing will be done in a more online digital format where we don't have to physically go somewhere and pay for something in any sort of that exchange of goods type of way. But still in these countries, you still have to do that. And for them, it's really leapfrogging not only sort of mobile payments, but credit card payments straight into crypto as sort of their very digitally native first economy, using crypto to power, sort of the new financial economy that they're setting out to be. As there are no really good banking institutions in those jurisdictions, they don't really have to have any incumbents to fight from. And a lot of people just are able to download MetaMask and get crypto right away. And what I was saying about the metaverse earlier is also plays in a large effect in these more emerging countries because we live a very good life here in the US and or wherever you guys are. But I think when you think about people in Southeast Asia, people in sub-Saharan Africa, people in depth of LATAM, right? Their day-to-day lives, especially for those people that are working on the farm, for working manufacturing, metaverse is their way out of sort of their traditional 9-to-5, very labor-intensive jobs, right? And they will much rather spend more time in the metaverse or playing games in a very immersive way, time and time down the forth than just, sticking to their day jobs and really being miserable in that, right? So I think the world, we're ultimately talking about what the trend is going to be in the future, right? Years and years down the road. And I think definitely it's starting to really evolve in a very digital first native way. And definitely there's no better technology than, blockchain with sort of the crypto element to it to power that economy, right?
Yeah, that's an interesting view. And I really do see that from that perspective, the metaverse becomes an escape from the real world where the real world isn't that great. So for people where the real world sucks, metaverse makes perfect sense. And it's kind of like I play World of Warcraft as well. And, it's one of those, those worlds can be very immersive. Yeah. So, and you can spend hours playing that and you have a sense of community, you have a sense of purpose, and you're doing your own thing. And if the real world sucks, I can see, being there, right? It applies to a lot of people who, get disabled and they sit in the chair all day, they play chess, they play games, because the real world becomes hard for them. They can't move around as easily and navigate the real world. And so you have that, and that makes a lot of sense to me. I think that's probably, as you said, not a U.S. reality right now. Most of the U.S. is a pretty good place to live. Even the worst parts, I think, is pretty okay. Compared to, I grew up in Africa, so in South Africa, I can totally see people being plugged in. The problem is infrastructure, right? The metaverse requires at least 100 megabit connections, probably more, north of that over time. and internet is just not pervasive enough on the continent. It's very slow. They're getting better, but Africa is behind. Obviously, Asia's got a lot more infrastructure around it. So again, the thing is, it's going to take time. I think the metaverse is interesting, but to the point of the economy, I think the U.S. economy, I agree, is in a bit of a slump right now. We have a problem that the Fed is not very forward-looking, so they're always looking in the rearview mirror. They missed inflation. They didn't act fast enough. They admitted it, yesterday and said, "Oh well, I didn't figure out all this stuff until now." And we kind of stuck with a bunch of octogenarians making decisions using metrics that are really, really out of date, and the economy suffering as a result. I think we don't have a choice right now but to just sit through this liquidity crunch. The liquidity crunch, as it affects crypto, is I posted a tweet about this like a week ago, and I said basically, crypto is a sponge that sucks up excess liquidity, and so we've had this amazing run because the U.S. just poured liquidity into the markets, and the moment they cut the liquidity, it's like you squeeze the sponge to get money out, and everything tanked. And it's a good thing, it's a bad thing as well. I think things were getting a little overheated in crypto, and so a pullback was much needed. I'd be very concerned if we lost 20K at Bitcoin levels, and even down to 24K start getting scary. I like being at the 30K level, 29, 30K, and holding above that for as long as possible. The longer we go, the better. And then Ethereum similarly, I think it's sitting at 1700 plus, 1600 plus is good. I don't mind if we go sideways for a whole year at these levels. I think it's okay. I think I get really worried if we start dropping to previous all-time high levels, and that'll spook everyone. But some consolidation is fine. Remember, a lot of companies have raised a lot of money in crypto over the past year. We're talking $10 billion plus, $20 billion, and that capital is being deployed every single day. When I speak to crypto companies that have raised the capital, they're hiring or they're keeping the existing teams going, and we're talking large teams, hundreds of people building products and services and going after the market. So I think it's all bullish longer term, and we're going to keep building out this crypto economy. But we just got to make sure there's price stability, I think, at least in the index coins like Ethereum and Bitcoin.
Yeah, I would agree with you, Vinny. I think, the outlook long term is definitely bullish. I would say, short term bearish. At the end of the day, a lot of the bull run was driven by retail investors. Like, there isn't really a set institutional investor base in the space yet that's really poured money in a meaningful way outside of private VC rounds in the secondary market. And so what's happened is, as inflation has risen, as the regular stock market has gone into a recession, what you've seen is that investors are just pulling their money from the crypto markets, because that's where, that was as you pointed out, Vinny, that was like the extra liquidity in the market. But also, they're looking around and they're saying, oh man, gas prices are going up, like food's increasing, like there's a recession, I need to really cash out of crypto. So I think even though it's great that we definitely have a bullish long-term outlook, that companies are super well capitalized, that there's hiring going on across the board, I still think that we need to be cognizant of the fact that that's great. Supply side is there, but the demand might take a little more time to come back.
Yeah. And also the risk-free rate is around 3% right now in the 10-year. And so as we get to that level, a lot of people and capital allocators go, you must remember, the people who manage large sums of money in treasuries and capital allocators, whether it's in family offices or big companies, they don't need to outperform the long-term sort of 3% bond rates. They just want to keep their jobs. They don't have to take any risks. They don't care if it outperforms. They don't make more money. They just get paid a salary largely to manage their treasury. So what you're finding with institutional investors is there's just no incentive to take risk right now, especially in a rocky environment. Nobody is pushing them to diversify into crypto, or losing money will get you fired. Making more money will not get you a bonus. The risk reward ratio for someone running a treasury at any family office or company is there's zero appetite for risk. There's no upside. Think about it. You get your salary as long as you don't lose money. But you get fired if you lose money. Why would you take any risk? And that's the problem right now. I think
every year, but not do anything.
You do nothing. You buy the 10-year and you give 2.9% a year, and you just show, hey, the amount of money we have just keeps going up. Don't fire me. Versus putting into Bitcoin, having a 20% drawdown. It's what did you do? So people just don't want to take risks on crypto right now. And by the way, take away the risk-free return, you can still run a pretty decent size, like a barbell strategy where you have a whole bunch of like 10-year bonds and then some really underpriced equities, and you go buy even stuff like Netflix is probably undervalued right now. I haven't seen the latest price this week, but like it was down 76% at one point. I mean, it's probably a decent buy, and you can probably put a little bit of the portfolio into growth stocks that have been hammered. Growth stocks that have been hammered, and then barbell it with the 10-year treasuries, and you'll be okay. And that's the problem right now with institutional money coming into crypto. There's the risk reward ratio doesn't make sense to anyone, especially in a bear market.
All right. Yeah. No, that is fascinating. Any bear market strategies that you guys would think people should consider right now in the next 6 months to a year? Like,
well, I'm happy to just say what I'm doing, and people can use it any way you want. Like, if you've been in crypto long enough, you just generally are just overexposed to crypto, and you're net long. There's no way around it because you've had really good gains over time. And so the play is just to hold as much as just hold it out. Sell if you have to sell for taxes or whatever else. But unless you have major liquidity requirements, just hold and sit this one out. I don't deploy much more cash into crypto at this point. I hold cash, and I don't care how cheap stuff gets. The only time I deploy more cash is if I have a position that I really believe in that is down 95% or 90% or even 85%, where I'll just do like a quick dollar cost average down to bring the price down. Because when something is down 90% and you can basically double your position for 10% of the price, you should probably do that, just to get the cost average down. And as long as it's obviously not too big or oversized. But I'd say that the other thing is you could look at doing regular buys on Bitcoin and Ethereum, and just like long-term dollar cost averaging in if you want to increase those positions over time, because those coins will be the first to move in a bull run. ETH 2.0 merge, I'm a little cautious on that one. I don't want to get too exposed there, so I'll wait until that's over. But otherwise, I think just the more cash you have, and this is for the viewers out there, the more cash you have, the more comfortable you are. The more comfortable you are, the less stressed you are when your portfolio dives 20-30%. You're like, whatever, right? So keep enough cash for living expenses and life for the next year or two if you have, and don't get overexposed. And if you get overexposed, that's when you have to become a forced seller of crypto. And being a forced seller of crypto historically has been the worst situation to ever be in.
Okay. Thanks, Vinny. Thanks for the insights. He's HODL. So Katie and David, any bear market?
I think for me, it's to look at markets where not as many other people are looking at. So I think, as I mentioned, like Africa, LATAM, they're not really in the bear market, and like for us looking into those markets, it's actually pretty fresh things coming out of those ecosystems, though not as mature. But I mean, that's what we ultimately do as venture capitalists, right? Investing in essentially almost always the price floor of any given token or price asset in the crypto space by investing in the earliest round, right? I think ultimately when we think about when those tokens unlock or when they list, when they have liquidity, it's a couple years down the road. And whenever we take a more longer term approach, we always think that in a couple years, crypto should inherently be at a larger market cap. Things should be in terms of higher value than it is now. So I think as sort of there's a bigger more and more of a bear market, it's actually a better and better time to invest as a venture capitalist, because our price floor is continuously getting lower and lower, right? And whenever you're able to invest at the absolute price floor of a given asset, it's always good to have enough ammunition to be able to deploy once those opportunities arises. And also there's less competition amongst rest of the playing field, because most other people are actually holding and not necessarily aggressively deploying capital. So we've actually saved over 80% of our fund now to start deploying more aggressively, but obviously still cautiously, given where the market is. It still won't have a bounce back anytime soon, but I think ultimately taking a longer term approach and looking where some of the lowest price assets are on the venture state, gives us a longer sort of time horizon to pan out our investments. And when we're diversifying those investments over a bunch of really cheap assets, we only necessarily need a couple of them to hit, and we ultimately have really good returns from there. So I guess that's my 2 cents.
Okay, great. Katie?
Yeah, and I would say for us, it's kind of, you're really concentrating on few best ideas and working with, teams that are responsive, really building for the future, and whether those are more mature businesses or if they're, smaller, earlier stage. I also, at least for me in this kind of bear market cycle, I look forward to kind of like that next wave of innovation that we're going to see within blockchain technology. We saw it, first in 2016, 17, we saw it again, in 2020, 2021, with, DeFi summer. And I think, this is a good time where projects can kind of figure out like what is kind of like the next innovation within the ecosystem. And I think that will drive forward ultimately like the next bull cycle.
Let me add one more thing on the DeFi point. Like, I think going back to basics on DeFi would be very helpful for the community. We gotten too far out the curve here. Like the point, I mean, Luna got and Anchor got to the point where we were paying 20%. I think Tron's trying to do 30%, like using tokens. For me, DeFi should be really, really simple for people and for users. You put a Bitcoin in, and you can go and borrow 20. Let's say on one Bitcoin you can borrow $20,000, and there's a for sale 20K or whatever it is on the price, and it's collateralized lending with some interest rate built into it. And the biggest issue I see right now is that with all this sort of yield farming that's happened, we've convoluted what should really be a simple mechanism to borrow money against assets, whether it's Ethereum or Bitcoin. But stable assets you should be able to borrow USD against it. And there's just too much churn from one protocol to another, and too much of a promise of these liquidity tokens and being offered up. And in some ways, I think some sort of centralization of at least liquidity is a good thing in crypto. There were like only 3 or 4 pools, but most of the liquidity was there, and it was really hard to go. You'd have to come out and offer a ridiculous liquidity token rate like Tron is offering, but this is the problem, right? The liquidity moves, it chases with fast money, and at some point it's a musical chair. And look at Luna, the whole thing depeg. So like I don't know. I'd like to see us go back to basics on DeFi and just build good, simple services for consumers to use.
Sounds great. So we have to wrap up soon. So any final words that you guys want to share with the audience? Feel free to give your contact information, and maybe one last thing. Out of DeFi, NFTs, gaming, I think let's just stick with those. Like, which one's your favorite? And then I'm just curious, like, in terms of investing. So, and then final words too. So feel free.
Yeah, I mean, so I used to be a professional gamer, so my bias is always towards gaming. And I think ultimately that's where it's going to bring the next 100 million plus users into the space. And, having more user base, having more retail traction, having people actually using the products that crypto is setting out to build is extremely important for the space. So I'm bullish on gaming overall. And gaming is going to be looking vastly different than, us controlling a character that is, sort of digitalized in a box on television. I think in the future, it's like gaming should be you controlling yourself in a digital format, and like you acting upon yourself to really immerse in that sort of gaming reality to do things that you aren't able to physically do in the real world, and take the risks that you aren't able to take in the real world, for better or worse. So I think that whole experience is going to be completely different, and very much looking forward to experiencing that firsthand.
It's the metaverse life. All right, thanks, David. And Vinny and Katie, to wrap up.
I would go with NFTs. I think that the market for DeFi and the market for gaming is really a subset of what the market for NFTs are. I think the gaming world is huge, right? But I think that NFTs become pervasive in everyday life, from subscriptions, membership, clubs. I've invested in a whole bunch of offline stuff that uses NFTs, ticketing. Like in every part of our lives, we're going to start seeing NFTs being deployed. NFTs can become things like, credit cards can become NFTs as well. And Vitalik's talking about soul-bound tokens. I just think NFTs become so pervasive that they are become the biggest, out of those three at least, the biggest play. But it's going to be highly fragmented, and so trying to find winners is going to be hard from an investor perspective. But I think for me, it's probably the biggest opportunity for us is to just transform the world from a world of centralized databases that hold information to, NFTs and membership tokens and other things like that. I mean, just even tickets. Tickets are great, right? Being able to buy a ticket and resell it. I mean, that's just a huge market by itself.
Great. Katie?
All right, I'll say DeFi. Even though I think, there's definitely a ton of problems in the space that you pointed out, Vinny, especially around kind of incentivizing rewards. I think that based on that, there are still a ton of use cases and a lot of good that DeFi can do at the end of the day. Like the number of people, even within the United States, that are discriminated against from opening a bank account, getting access to credit cards, getting access to lending and borrowing services. DeFi can long-term basically fix a lot of those things. And I'm not going to say that this is going to happen next year. I think gaming and NFTs are actually the thing that are going to bring in, the next several million users. But I do think DeFi has the ability to really do a lot more good in the next 5 to 10 years.
All right. Thanks so much. Really appreciate it. Really fascinating perspectives and insights. So great. Everyone should follow all of you, David, Vinny, and Katie. Thanks so much for joining in. And
always leave our contacts.
Please share your contacts in the comments section here on the upper right. And if there are any questions for you, feel free to answer it. Maybe stick around to answer them, and that'd be great. So,
Thanks again.
All right. Thanks so much, guys.
Thanks, guys. Bye-bye.
Bye.